Hi, fellow traders. This is Trader Joe at investorshelp.net right here on Facebook. Hopefully, you had a great week in the markets. It is now Friday, about almost 1:45 California time. I'm going to take a quick look at GameStop Corporation. As you can see, the symbol is GME. Once again, we're on the Thinkorswim trading platform. We're looking in this case now at a 1 hour chart. We have found out that trading off an hourly chart, and I know many of you also trade off of an hourly chart for swing trading. It is not recommended for day trading. We use a quicker, faster chart such as 15-minute, 5-minute, 1 minute, something like that. But for swing trading over a few days, it's pretty ideal. So let's see what happened. Opening trade is shown by the blue line. Our trading rules were met. 1, 2, 3 were met, as you can see on this time frame, which was last Friday in the morning before lunch, California time. Entry between 173 to 175, or of course you could have bought calls at that time or some spreads. But in any event, we received the initial notification on rule number 1 on Wednesday. We received confirmation on Friday morning, and it was confirmed. We got also approval authorization from the RSI. So if we had entered at this price, of course, it would be closer to 178, but with a red candle, the important thing would be to have waited until we start seeing a green candle, which we did get prior to the close, which is in the area of, like this case, it was 170, 176. With entry at that time, anytime along this line here, closer to the 175, 176 area, we had a nice move up from that time. What I want to focus on is we did have a gap. As you can see, price closed in this area roughly at 209.26 or thereabouts on Tuesday, and then it gapped up on Wednesday morning, and it opened way up here and then subsequently closed up here. Okay, so that left a gap from Tuesday to Wednesday, that there was no price action or during the day where price action was filled. But I'm sure if you look at an intraday chart, you will see price action there between in the pre and post markets. Price went up, and price did reverse way up here at 268, which was early this morning. Hopefully you sold your stock or sold your options at that time and made a nice profit and either called it a day or went on to some other stocks. So price has moved down today. As we can see, it closed at the low, roughly at 221, 222 area. And now the question is, will price fill this gap? We're going to find out next week. Also, what is on this chart, I put a Fibonacci with 100% up at this top of the body here, which is today's high, and then I put the low down here at these low bodies on Wednesday of last week. Okay, so price action from this low to this bar high, our candle high, it was in this range. Fibonacci lines are automatically drawn at 61.8, 50, and 38.2. So we're going to see if price reverses near the 50% retracement line and the 38.2 retracement line. I know you can draw your Fibonacci from, instead of low to high, you can draw it also from high to low. This line would be in the same location but it would read 61.8%. The price would still be the same. That doesn't change. So anyway, let's keep our eyes open next week, Tuesday, to see if price reverses in this area where I have drawn a yellow oval. If so, and price starts to work its way back up, I'm going to probably once again in and buy some calls or some spreads because it has a good opportunity to go up. Now the question is, though, don't get in until you see price action reversing. If you're using an hourly chart, make sure that the high, or you could wait and say the high close of the current hour candle is above the high of the previous red candle. In other words, you would have, let me see, here's a good example. If you see this, of course this would be a red candle. Here's a better example. Let's say on Tuesday you see price action like this. I would not enter. But once price action, the green bar, gets above the high of the previous bar, you could enter. Or what some people, more conservative people, do, they wait for this bar to close to make sure it's going to be a close higher than this previous red candle. Do you see that? And then they would enter probably here, or they would wait once again until here. I know that might sound a little confusing for newbies, but you'll learn to read candles over time. So I personally believe it'll come down a little and hopefully bounce off of the 50, and we'll have another run up, make some more money, and repeat. As they say, rinse and repeat. Do it again and do it again until it fails to reverse, okay? Which will happen. So this is Trader Joe saying good luck to you. There's money to be made in a lot of different stocks, but you have to do your analysis and learn what you're doing. So I would highly encourage you to study, spend a few hours over the weekend, and get ready for another wonderful week. We're going to make a lot of money once this market reverses and begins to crash, because markets move down a lot faster than they move up. So that's when you could make a lot of money. So anyway, Trader Joe saying have a wonderful weekend. Talk to you next week. So long for now. Bye-bye.